Hi all, in today's video we will be talking about income tax return. What is ITR, what all forms are there and which form to use. First thing first, what is income tax return? Well, these are the forms in which taxpayers file information about their income earned and tax applicable to the income tax department. In total so far they have notified 7 forms: ITR 1, 2, 3, 4, 5, 6 and 7. Till date, every taxpayer should file his return on or before the specific due date. In our case, for individuals and non-tax audits, it's 31st of July. In case of audits, well, till September 30th, they have to file the audit reports, and for returns, they can fill it by 31st of October. The question is, why would anybody file the ITR? Technically, if the income exceeds the basic exemption limit, one should file the income tax return. Other than this, even if the income is below the exemption limit but assessee has deposited more than 1 crore rupees in current bank account, deposited more than 50 lakh rupees in saving bank account, spend more than 2 lakh rupees on foreign travel, electricity expenditure is more than 1 lakh, TDS or TCS is more than rupees 25k, turnover is more than 60 lakhs, professional income is more than 10 lakhs. And if you want to claim an income tax refund, if you have earned from or have invested in foreign assets during financial year, if you wish to apply for a loan or visa, if the taxpayer is a company or firm, irrespective of profit or loss, if you have lost from business or profession or under capital gain head, and you will not be allowed to carry forward it to the next year unless you file the return before the due date. Coming to the main topic, which ITR form to file. First one we have is ITR 1 or Form SAHAJ. This form is for resident individuals whose income does not exceed 50 lakh rupees and includes income from salary or pension, income from one house property, income from other sources, and agriculture income up to 5,000 rupees. Next we have ITR 2, which is for the use of an individual or HUF whose total income can be more than 50 lakhs and includes income from salary, pension, income from house property, income from other sources. If you are an individual director in a company, if you had investment in unlisted equity shares at any time during the previous year, being a resident, not ordinary resident, and non-resident, income from capital gain, having any foreign income, in agriculture income is more than 5,000 rupees, owning assets outside India, including signing authority in any account located outside India. If tax has been deducted under section 194N, if in case payment or deduction of tax has been deferred on ESOPs, if you have any brought forward loss or loss needs to be carried forward under any income head. Further, in a case where the income of another person like one's spouse, child, etc. is to be clubbed with the income of the assessee, this return form can be used while such income falls in any of the above categories. ITR 3. The current form is to be used by an individual or HUF who have income from proprietary business or is carrying on a profession. The person having income from the following sources are eligible to file ITR 3. Carrying on a business or profession, if you are an individual director in a company, if you had investment in unlisted equity shares at any time during the financial year, the return may include income from house property, salary, pension, other sources, income of a person as a partner in a firm. The current ITR 4 applies to individuals, HUFs, partnership firms other than LLPs which are residents and whose total income includes Business income according to presumptive income scheme under section 44AD or 44AE. Professional income according to presumptive income scheme under section 44ADA. Income from salary or pension up to 50 lakh rupees, income from one house property not more than 50 lakh rupees, income from other sources having income not more than 50 lakh rupees. Please consider that any individual earning income from the mentioned resources as a freelancer can also opt for a presumptive scheme if their gross receipts are not more than 50 lakhs. A presumptive income scheme under Section 44AD, 44AE, and 44ADA is when an individual or an entity opts to drive its income on a presumptive basis, which means when the income is presumed at a minimum rate based on a percentage of gross receipts or gross turnover or based on ownership of commercial vehicles. However, if the business turnover exceeds rupees 2 crores, then the taxpayer will have to file ITR 3. Next, ITR 5 is for firms, LLPs, limited liability partnerships, association of persons, AOPs, body of individuals, BOIs, artificial juridical person, AJP, estate of deceased, estate of insolvent, business trust, and for investment funds. ITR 6 is for the companies other than the companies claiming exemption under Section 11, that is, income from property held for charitable or religious purposes. And now let's talk about ITR 7, which is for persons including companies required to furnish returns under Section 139(4)(a), 139(4)(b), 139(4)(c, 139(4)(d, 139(4)(e, 139(4)(f. Now what are these sections? Well, return under section 139(4)(a) is required to be filled by every person in receipt of income derived from property held under trust or other legal obligatory wholly for charitable or religious purposes or in part only for such purposes. Return under section 139(4)(b) is required to be filed by a political party if the total income without giving effect to the provisions of section 139(a) exceeds the maximum amount not chargeable to income tax. Return under section 139(4)(c) is required to be filed by every scientific research association, news agencies, association or institute referred to in section 1023(a), institution referred to in section 1023(b), funds or institutions or university or other educational institution or any hospital or other medical institution. Return under section 139(4)(d) is required to be filed by every university, college or other institution which is not required to furnish a return of income or loss under any other provision of this section. Return under section 139(4)(e) must be filed by every business trust which is not required to furnish a return of income or loss under any other provisions of this section. Return under section 139(4)(f) must be filed by any investment fund referred to in section 115(ub). It is not required to furnish a return of income or loss under any other provision of this section. You can pause here and can have a quick look at the summary screen. Thank you for watching till the end. If you find this video useful, do tell us in the comment section below and feel free to share it.